Hello everyone and welcome to today's webinar where we'll be taking a look at carbon reporting systems and how to save time and add value. My name is Stephen Kennett and I look after the Energy and Carbon Management channel here at 2 Degrees. I'm delighted to welcome our two presenters today from Carbon Clear. We have Mark Chadwick, CEO, and Stuart Lemon, Head of Advisory Services. Today's presentations will last for around 30 to 35 minutes, which will leave us with 10 to 15 minutes for questions at the end. Before we begin, I'd just like to remind everyone that you can submit questions throughout the webinar using the Q&A box on the bottom right-hand side of the screen. Just type in your question and press send, and then we'll wait till the end before answering as many as we can. As an aside, if you should have any technical issues during the presentations, please use the chat box on the right-hand side to send me a message, and I'll get back to you as soon as I can. So without any further delay, I'd like to hand over to Mark, who'll get us started with today's presentations. So over to you, Mark.
Thank you, Stephen, and good afternoon, everybody. Thank you for joining us today. As Stephen said, our topic today is to explore carbon reporting systems, the need for them, how they add value to your organization, how to go about selecting the right product, and also to take a look at some best practice examples from companies that Carbon Clear has worked with in this field. Sorry, we're just trying to find out how to control the slides, please. Thank you. Great. Sorry about the mug shots, but we thought it is often helpful to know who is talking. My name is Mark Chadwick. I'm the CEO of Carbon Clear, and I've been with this business since the beginning, 8 years or so ago. And later on, you'll be hearing from my colleague Stuart Lemon, who heads our advisory practice. Stuart's going to walk you through some of the excellent work that his team does in this area. So just in terms of setting expectations around timing, the section where we discuss carbon reporting requirements and the software systems should last around 20 minutes, and the best practice example session around 10 minutes, which will leave us ample time for Q&A at the end. As Stephen said, if we can post questions throughout, that would be great, but we will wait until the end before we pick them up. For those who don't know Carbon Clear very well, we were founded in 2005, so we've been around quite a while now, and probably for the carbon management discipline, we were one of the quite early entrants into this field. We are an international business. The majority of our people are here in the UK, but there are a number of other people in different parts of the world, so we can support an international client base. We're a profitable business, and we aim to work with blue chip organizations. So, as at today, we have active relationships with around 10% of the FTSE 100 and a range of other organizations who are FTSE 100 equivalents. I think what we like to see as being different about Carbon Clear versus some of perhaps some other consultants who are more traditional environmental consultancies is we're really looking for systematic approaches to drive long-term commercial benefits through carbon management. So we don't believe it's an end in itself. We believe it has to be aligned with business issues and aligned with business value. And when we do this really through measuring and reducing emissions and communicating with the various stakeholders who need to know what's happening inside an organization. This combination of using data and reporting to drive action and making sure the communication is then streamed out to your necessary stakeholders, we believe is critical to successful carbon management. So now that the introductions are over, we can get into the beginning of the main content for today. We're going to look at the whole process of managing carbon reporting and to see how and where software systems might be able to help you, and finally, how you would go about selecting a software system. So I think those who are in the field of carbon management, sustainability, and reporting of those issues will have noted an increase in the reporting requirement over time. And I think probably all of us would agree that that reporting requirement is continuing to increase. I think it's important to maybe pause for a second and just to try to understand what's driving some of this increase in reporting. And from our perspective at Carbon Clear, we see the principal drivers being a mixture of hard and soft compliance reporting. And hard compliance, we mean legal requirements. Many of you will be respondents to CRC. Many of you will have to put in mandatory greenhouse gas statements in your annual report and accounts. But added to that are a number of different soft compliance issues. So what do you have to do in order to comply with market expectations of you? So that means things like CDP. It's critical for you to communicate to your investors what you're doing in and around the climate change space. And while it isn't a legal compliance issue, it is a critical part of any large organization's license to operate. So this is what we mean by soft compliance. Related to soft compliance, we're seeing an increasing number of customer-driven requirements. These can manifest themselves in a whole range of different ways, from formal conversations with your procurement person inside large companies, questionnaires on tenders, formalized supplier score sheeting. So we're seeing this, all of these areas increasing. Added to that, there are, of course, internal reporting requirements. So if we're looking to drive performance in our businesses, we look to cascade targets down to different business units, for example. We would therefore need to help the people in the business who own those targets know whether they're complying or not. There's general management information, and this is something we're seeing becoming increasingly hard and financial in nature, for example, as a result of CRC. This is now a tax, and it's a material tax for a number of our clients, and therefore it is important that as sustainability professionals and energy professionals, we are reporting regularly to our finance departments on as to how much tax they should be accruing. And a lot of us look to leverage the power of our staff to make sure that we can drive reductions more effectively, and they are another key stakeholder group for our internal reporting. What's clear is that all of these different reporting requirements have different scopes. Flexibility is important, and we'll talk about that a little bit more later. Thanks. Oh. So one of the things to cover, one of the key challenges we see. So I see two key challenges that I want to talk about today. The first one is the system, and the second one is the team. So this slide here, we talk about the challenge of the system. What we are dealing with here is a combination of a multi-input and a multi-output system. But broadly, you have to use only one tool to deliver all of these objectives. We can see on the left-hand side lots and lots of different data sources that need to be fed into this machine, and many of you will recognize these. You need to put in electricity and gas consumption data. You need information about your property estate. You need to know about travel emissions that are related to your business. You need to know about emission factors and how they change over time. You need to know a methodology that you want to apply, or perhaps, for many large organizations, multiple methodologies to apply. So CRC, for example, has a very different way of drawing organizational boundaries and defining what should be reported to that would be implied by the GHG protocol framework, for example. And coming out of the machine are a wide range of different reports. We've talked a little bit about CDP. We could add into this Dow Jones Sustainability Index, FTSE for Good, CRC, climate change agreements, EU ETS, and the list keeps going on and on. The good news is there's some commonality here in that they, for the most part, rely on the same data. The way that you organize that data and the final form of the reports varies significantly, but we can rely on the data remaining consistent. So I think what's most important here is that when we set about designing the system, we do so with this multi-input, multi-output process in mind. And we can talk a little bit more about that as we go further through the presentation. The second challenge that I referred to is the challenge of the team. And broadly, I think that means those of you on this conference call right now. As an organization, we recruit a sustainability team very often because we want them to bring passion and enthusiasm for the topic area to our business. We want them to look for inefficiencies in our business and ways that we can improve and be agents for change and engage with stakeholders, talk to the management team, the employees, the customers, really trying to invigorate our organization into thinking in a new way. And through this new perspective and this energy and this change, they bring about adding business value. And that's the ideal scenario, but I think if many of us are realistic about how our day-to-day roles really pan out, what we can see is that what we're being asked to do is gather a lot of data, check that that data is correct, spend a huge proportion of our time manipulating that information into reports that will be demanded from us from all these different stakeholders we mentioned before. And what happens is, as a very small team, the organization comes to rely almost entirely on these individuals to get that data through the system and report it out to stakeholders. It doesn't give much time to be those change agents and to engage with the stakeholders and to add business value. And I certainly think from the companies that we work with, it's also a really good way to smash passion and enthusiasm for a topic area. So I think these are the two principal challenges that we're looking at. And I guess one of the things that we would see in our business is if you can address the challenge of the system properly, you can to a very large extent mitigate the challenge of the team. I think probably one final piece of context that or a thought that I would like to share. The slide here you'll see is drawn from Carbon Clear's Carbon Management Maturity Framework, or our maturity curve. And a number of you will be familiar with this, I'm sure. We, through this process, track the sophistication in carbon reporting of many organizations. And every year we surface some of these findings in a report that assesses the carbon management performance of the FTSE 100. What we see as we look at organizations through the lens of this framework is as the carbon management maturity of an organization increases, so does its reporting burden. When you're in a very immature business from a carbon management perspective, your principal challenges are going to be about getting things started, getting your organization moving, calculating your first carbon footprint, delivering your first bit of energy efficiency. And the reporting requirement therein is actually pretty small. Once you move up through the organization and to a point where you have a healthy and an established carbon management business, it's now critical for you to report more readily internally and externally to make sure that you have integrated and well-managed programs, to make sure that your senior managers know where their investment is going and how that investment is delivering returns. And when you reach the final stage of our maturity curve, where you have you're at the center of a carbon management community or an ecosystem, your reporting requirements balloon enormously because now you need to report up and down your supply chain much more effectively. You need to engage with other interested parties such as NGOs and others around you to influence them and to spread your best practice externally. So it's fairly clear when we look at companies through this lens that the reporting requirement is considerably more difficult the more mature you become as an organization. I think the interesting point to note here is that it doesn't always follow that the size of the sustainability team increases in line with that complexity. So how can software help? Well, listed on the slide here are a few sort of top-level ways that software improves the situation. So clearly you can automate the measurement, the monitoring and the reporting of energy consumption and carbon data. And that's one of the principal and primary functions of any carbon software. You can also, with many systems, track performance against targets and forecast future performance against targets. And we see this as being increasingly important with more sophisticated organizations. Sophisticated organizations who do cascade down reduction targets to regional level, to facility level. In many cases that also tie executive compensation to achievement of reduction targets. If you don't have a system in place to track and forecast and report that performance against target, you should expect regular emails from all and sundry in the business saying, "Hey Bob, how am I doing against my target?" Not really very helpful. having a system in place that can automatically manage data also reduces human error, and this is very clear. And through the process of having a system that manages data automatically, you do also improve your audit process. Audit trails can be maintained very comfortably inside a software system, and probably not as effectively inside an Excel document. We've found time and time again that by switching to a carbon accounting system, the whole process of getting through the number sign-off process at the end of year is far, far smoother. We have a very clearly defined job, and that is to populate the system, get it right, produce a governance document, and then the audit team can then interrogate that system rather than interrogating our clients. But I mean, the important point here really is, these are just a few value drivers here. More sophisticated companies can use software tools to visualize their supply chain emissions, for example, looking for areas where particular hotspots might exist. They can use systems to delegate the collection of information to regional officers. And this is a great thing to do because they know their data better than the people at head office more often than not. But I think the important point to work out before you begin the process of selecting a carbon management software is, what does value look like to your organization? What are you really trying to do differently when you implement a carbon management system? If you can work that out, then that really does help support your process. So what now? I think what we would suggest in terms of process, the first step, as we mentioned, is to work out what business drivers you're really trying to push through with your software. Is it about reducing key man risk, for example? Is there one person inside your business that controls all of your data, and does that present an issue for you? If you're thinking about your system today, can it provide the information, the reports you need, period? Never mind whether or not it can do it in a timely and cost-effective manner. I think one question that always occurs to me is, does the system support your role today, or actually has the system and managing the system become your role? It clearly should be the case that the system provides you the information and the tools you need to do your role better, not that you should be spending your entire life managing it. And I think flexibility is critical for us. As we all know in our field, the reporting requirements evolve over time, perhaps unexpectedly, perhaps more quickly than we would have expected, and therefore a system that is rigid in nature and is designed to produce one or two reports probably isn't going to last and going to keep up with your long-term requirements as a business. So the system you use for data collection should be minimizing the pain in carbon reduction. And if it's not minimizing pain, then probably you need to think again about the one you've got. I know a number of organizations I've spoken with whose software system absolutely maximizes the pain. That doesn't sound so good to me. I think probably my final thought to leave with you on this slide is a bit of a reality check, I think, in some ways. So it's all well and good thinking about your flexible reporting requirements and what you want to report and to whom do you need to report, but that needs to be tempered with a really good hard look at what data you have and what reporting that data will actually support. There's no point promising to somebody in your organization that you're going to do supply chain carbon visualization if you don't have the supply chain data to support that work. Similarly, there's no point promising to your organization that you're going to track half-hourly meter data and energy peaks and troughs in your manufacturing facilities if you don't have the metering in place to do it. So it's always worth having these two spheres in mind and making sure that your requirements are balanced between what you would like to do and what you credibly can do. So just to leave you with a few categories that we would look to when we're thinking about putting together our requirements specification. The first one is data management, and this is probably the most obvious one. This is where we are seriously taking a look at our organization and assessing what data do we want to include in our reporting system. What have we got? What can we get? Thinking about the systems where that data currently sits and how can you get it from one system into another. It may be that it exists in a bunch of invoices inside an Arch Lever file in somebody's office. Well, that's okay. You need to know that beforehand so that you can make a plan to get that data into your system, and then make sure you select a system that will allow you to enter data manually in a auditable and high integrity way. I think you also need to look at where in your business you might have high frequency data. And I say this primarily because if your intention is to store a lot of high frequency metadata in your system, you need to make that very clear in the beginning of your requirements definition, because some corporate reporting systems are not designed to store that sort of data. They were designed for annual reporting, where you put a single carbon figure into a report, or perhaps you can break out carbon and energy. They're designed for low frequency fixed place reporting. If you're looking to store that kind of high frequency data, you need a different sort of system that will A, be able to cope with it from a performance perspective, but B, be able to report that back to you in a way that makes sense. If you can't get the data out in a way that makes sense, there's no point putting it in there in the first place. The second bucket to consider is auditing. So if you do subject your data to an annual audit, it's worth thinking about how your auditor will interact with the system. What features does that system need to provide to your auditor to allow them to do their jobs in a timely and an efficient manner? Think about engagement. And here you'll see we have engagement and reporting in a different bucket. Engagement is much more about delivering a single report in one direction. Engagement is about communication both ways. So what kind of audience do you have that you want to communicate and engage with? And engagement can be as light touch as providing dashboards so that people can manage and manipulate their own data and produce their own reports, or it can be as far and advanced as gamification, which we're starting to see from some of the software providers. Reporting is pretty much bread and butter for this system, for the system we're trying to specify here. But it's worth thinking about whether or not you are comfortable with pre-established reports that the software comes with. Do you need, and do your stakeholders need, to be able to generate custom reports? Do you need to be able to provide dashboards for senior managers? So all of these areas around what kind of reports you need to deliver should be considered beforehand. I think we increasingly hear companies who want to have a template-driven approach to produce CDP reports and GRI reports and things of that sort. So I think that's worth considering as a key requirement for you if that's an area of interest. The final area to think about is strategy and carbon. And what we mean by this is, how do you go about setting targets? How do you go about deciding where your organization is going to focus its attention? What system, therefore, what functionality, therefore, does your system need to allow you to do this? It's not unusual for us to see carbon accounting systems that are basically data management and reporting systems and lack a lot of this complexity and nuance around targeting and forecasting. So if this is a key area for you, and this is an area where you think you can help make a business case internally, then you need to ensure that the system you ultimately select can deliver on that promise. So hopefully that gives you a reasonable view of this in approximately 20 minutes. I'm going to hand you over to my colleague Stuart, who will talk to you about some best practice examples. Thanks very much.
Thank you very much, Mark. Okay, so slightly shorter section from me now, just trying to pick up on some of the points that Mark's made by using some of the examples of organisations that we have helped over the last couple of years to specify and implement carbon accounting systems. We have a couple of questions appearing in the chat box on the webinar. I'm planning to address those when we finish the main presentation, so don't worry, we will come back to those. I think the other point to make just before moving on is that as an organisation, Carbon Clear is not only carbon neutral, but we're software neutral as well. Our role in this line of work is to help our clients to identify their needs and then to go out and find a system that matches those needs. So whilst we work very closely with our clients and with our software providers, we're not specifically allied to any individual piece of software. And that's a view that we like to impress upon our clients. We don't recommend anything particular. We like them to assess the business need and put together a specification on that basis rather than the product driving the decision. So in terms of how to identify the software, just sort of picking up on Mark's points, there's some very simple questions to ask. What is it that the business is trying to achieve? Is it efficiency? We talked a lot about improving the efficiency of managing numbers and generating reports. Is it about accuracy and transparency? There is a lot of good work being done, certainly in our client base, around improving the accuracy of reporting. And by accuracy we mean the accuracy of the numbers going in, the quality of those numbers in terms of making sure that they are real, live bits of information, and that they can be traced back to some form of primary data and therefore can be audited. I'm going to look a little bit as well about how to undertake this and implement this. There is no one size fits all in terms of carbon accounting software or systems. We've got 3 examples in the presentation. Each of the options in the middle there is represented. We've got a spreadsheet-based approach, and I'll explain why we stuck with Excel for that one. We've got what we call a simple tool. That's not to be in any way derogatory to that particular system, but it's a very good, basic, robust web-based system. And then with the final one there, and in fact the first we're going to discuss, is a very large multinational complex system. Key also to remember is who is the output for, and that to some extent will drive the complexity of the system and the specification of the system. But again, key issues are that it must support the business, it must support the team doing the work, and it must be enabling them to undertake the activity that they probably were employed to do and would be very happy to spend their time doing, rather than just chasing people to provide numbers and answering questions from auditors. So the first of our 3 case studies is RBS, Royal Bank of Scotland. They have in place and have had for a number of years a complex and comprehensive carbon accounting system. And in conversations with them around a piece of work we did for them last year on some Scope 3 assessment, it became clear that they were dissatisfied with their system. The system had been implemented a number of years ago, and the organisation had evolved away from the initial implementation, and the people interacting with the system had probably changed as well along the way and had built into it some structures and systems and processes that were no longer appropriate for the business. So we undertook a detailed specification analysis for them, looking at what their system currently did, what they wanted it to do. We engaged with a number of internal stakeholders in the business with a view that we were going to help them to select a new piece of software to replace their existing carbon accounting system. As it turned out, based on the needs analysis, we took the view that what they needed to do was use their existing system, but effectively to start from scratch with that and to rebuild it and make it fit for purpose. And in terms of the how around that, what we were trying to do was to eliminate unnecessary information. We'd identified through the process there was a lot of unnecessary calculation being performed, a lot of it being done in offline spreadsheets, and then final result numbers were being put into the system. The system was therefore just being used to store information, when in fact it was a large and complex and very capable system that's able to provide a lot of detailed calculations and extrapolations of numbers. So we helped to identify a lot of that unnecessary information, but we needed to ensure through that process that the system remained flexible. As you will be aware, RBS has undergone some changes over the last few years and will continue through to changes in regulation of financial markets to undergo changes. So the ability to flex the system to report on different aspects of the organisation and different activities is very, very important to them. So we've rebuilt that system now. We've got a whole entirely new structure which reflects the organisation's geographical spread, but it also reflects their reporting structure internally as well. And we're also now enabling it so that it can report on a product basis too. So I think this very much reflects what Mark was demonstrating in the slide with the engine on it. There are a very, very large number of inputs into the system. Metadata, activity data in offices, supplier data from third parties, and it all goes into a single repository, and that granular data can then be cut and sliced and reported in a manner of ways at any given time. The key for us is that the calculations are carried out within the system. The system accepts raw data, it performs the calculations, it stores the basis of the calculations, and it removes any uncertainty from the outputs and allows for absolute auditability of the data. Which, as the organisation moves to increasing frequency of its reporting, both externally and internally, that's going to be increasingly important. I think the final point there is just to explain that alongside the system, we maintain a full and complete set of governance documentation for them, which includes all of the rationale around how the system was specified and how it was built, all of the assumptions in there, and the clear description of the basis of reporting, which allows the auditors to get very, very quickly to an assessment of the numbers, rather than asking questions about why those numbers were in there in the first place. So the result, still in the implementation phase, but so far we can see very clearly transparent and accurate data. Systems already begun to be used for internal carbon reporting requirements, and is going to drive all of the soft and hard compliance requirements that the bank has, both for mandatory carbon reporting and CDP. And I think the key for our clients, the team at RBS, who are very passionate in wanting to drive environmental performance in the business, is this gives them flexible, accurate, up-to-date carbon information that they can produce reports as and when they need, as and when they are asked to support the work that they're doing, and to drive behavioural change and activity within the business. And that's helping them to set targets and begin to benchmark themselves against their peers, both externally and internally. And I think the key for us and for them really is that it allows them to think much more clearly about the future. Their day job is no longer about calculating data, chasing data, and getting the system to have numbers in it. That's, to most extents, taking care of itself, and it's allowing them to concentrate much more clearly on driving change and setting their strategy for the future, including future targets, which is a great position for them to be in, and a very sort of fantastic result for us, because that's exactly what we as a business are here to do. So if I move on from RBS, from a very large, complex system pulling in data from thousands and thousands of sites, to McFarland Group, who are a mid-cap PLC who produce packaging and labelling, and they have around 18 sites across the UK. As a PLC, they will have been collecting a limited amount of information up until the requirement for mandatory greenhouse gas reporting, which came in at the end of September last year. They had done a very good job internally of assessing the data that they needed to collect, and they put in place a process to collect that data using Excel spreadsheets. But they were finding that the complexity of that, even with a relatively limited set of activity data, was becoming onerous. It was becoming a burden on the individuals managing it, and it was something that the sites were not very well resourced to do. They were quite close to the deadline in terms of needing to report when we spoke to them, so they asked us to get involved from two perspectives. One, to finalise the collection and verification of their carbon data, and to perform the calculations that would allow them to comply with mandatory carbon reporting. But they also wanted us to use the knowledge that we gained in looking at their organisation to help them specify and implement a new system. So we did that, got the report done and into the annual report and published with a statement of independence that they could rely on. And we looked at the market and looked at their needs and recommended that they implement an easy-to-use but robust web-based system, in this case Managed CO2. Managed CO2 were very helpful to us in talking to the client, taking them through the process of implementation and also helping them to clarify the internal business case for investing in an external software provider rather than continuing to develop their own Excel spreadsheet. They're now using that, it's in place, they're doing their carbon reporting through it, and they're going to roll that out to include other areas of environmental data. So that's a sort of good use of a perhaps less complex system than for RBS with thousands and thousands of locations. Final one I'm going to talk about here, and really just to sort of emphasize that software systems and tools must be appropriate for organizations. Brahma has been a client of ours for a couple of years, and they had a relatively urgent need to satisfy a number of their supply chain customers, in fact, who were asking them to give them carbon footprint information, both for the organization as a whole and in relation to the elements of the carbon emission that were linked to their business. They had no way of doing that, and they asked us to help them to put something together, and they wanted a reporting methodology that was simple and straightforward, but was robust and built on an external standard, in this case GHG protocol. So what we did for them was to create actually an Excel-based tool, although it is an online tool, to pull in country-level data and enable them to report their emissions at a global level. It basically looks at their Scope 1 and 2 activity with a little bit of their Scope 3 activity. We implemented that probably 18 months ago now, fully operational in 9 different languages, and it reflects their operational footprint, which is right across Europe. It gives them a very clear, simple overview of their business and allows them very quickly to respond to questionnaires from their customers and other stakeholders. We're finding also that now that they have the requirement to comply with the mandatory greenhouse gas regulations, it already has the data that they require for that. So it's given them a very quick and straightforward approach to reporting their emissions. It's interactive, and it's now allowing them to benchmark sites, set targets, and identify areas of best practice in the business, which they're rolling out with a view to driving performance improvements and reductions across their business. In terms of the 3 case studies, that's it from me. I think hopefully that gives a flavour of some of the key points that we're trying to make in terms of selection, implementation and use of software systems. There are a number of questions coming in through the portal, so I'm going to switch onto speakerphone and Mark and I will go through those questions and see if we can answer them for you.
So one question we had was which stakeholders should be engaged with prior to embarking on a process? I think that's an excellent question. I think the reality is it is going to depend somewhat on your business, but what I would suggest to do as your starter for 10 is I think it's very important that you speak with those individuals in your business that are data providers. It's important for you to understand where do they get their information from, in what format, how frequently do they receive it, and how they can provide it to you. Because the answers to these questions will drive a lot of how you design your system. I think business and management users are a key stakeholder also. And what you'll probably find as you start to talk to people in your business is you'll uncover a lot of unmet needs. So there'll be lots of people who want information in your business who aren't yet getting it. And while you're sort of speaking to these people, also think about where you might be giving them information that they don't use, because that's really just a waste of your time and energy. So keep in your mind when you're going through this process, what data do I need to provide that I'm not currently providing? What data am I providing that nobody reads? And what data do they find valuable, therefore do I need to carry on doing? And so keep that in mind when you're speaking with your business and management users. One other, I think, important stakeholder is your customer-facing staff. What you might find is that they are encountering many questions from customers around sustainability that they're not currently able to answer. And the way we've dealt with this in the past is things like producing FAQs and customer checklists. And that's been quite useful to frontline staff. The final set of people, just off the top of my head, in response to this question, I think it's worth talking to your auditor. So if you have your information signed off externally and you're about to embark on your new system, now is a good time to find out what is it about the way you store and manage data that they like, what don't they like, and how do they suggest that you improve things. So that hopefully is a useful set of initial people to reach out to. We had another question about gamification and an example of gamification. I think this is fairly cutting edge stuff, so you don't see it in many places, but an example to help understand what gamification in this area could look like. You could, for example, create games that are incentive structures around green behavior. So what we have seen an organization do is there is an iPhone or iPad-based game system, and people can subscribe to that game system, and it gives them the opportunity to do challenges like cycle to work or make a pledge to turn down their heating or various things of that sort. And when they do some of the activities on the list, they gain points and they go up levels and they can compete among teams. So it really is about trying to create a bit of a fun environment around it. There was a question about future-proofing, and I thought this was an excellent question. How do you future-proof your system? Clearly, I don't think there is any such thing as future-proof because we never know what's around the corner. But the best approach that we would suggest is to make sure that you are storing your data in the most granular manner possible. Because as we said before, the commonality of all of these reporting systems and all of these methodologies is data. So if you can store it in the most granular manner possible, what that gives you then is the maximum potential for flexibility in future reporting. But beyond that, as we said in an earlier slide, if you don't have the information available, you can never report it, right? So that's clear. So it's also worth keeping in mind and having a process in place to assess new data requirements and to have a system that is flexible enough for you to be able to incorporate new KPIs, new data sources, so that as your data quality improves over time and your data sources increase, you can make your system capture that information. We had a question about what kind of system RBS chose, which provider is that. I think this is public information. It's available on the websites of the providers. RBS are a Credit 360 customer, have been for many years, and that's the system that we are working with them on. I think there was one other question about whether mandatory greenhouse gas reporting is likely to be extended. I think that's a very tricky one. I mean, there was talk in and around the consultations that it may be extended to large organizations, but I don't have any insider knowledge on the topic, so all I can relay is what the legislation and the narrative around the legislation was in the first instance. So large organizations, I'm not even sure if that's been clearly defined yet, but somewhere around maybe 2016, I believe it was, there's a plan to reassess whether large organizations are brought in. There's a new question from Toby. How would you suggest running a carbon software selection process? Is a full tender advisable? You know what, Toby, this is a really tough one because it depends on your organization. We have, with some of our clients, done an extremely limited tender based on our knowledge of the market and almost procured a product directly for them. And that certainly saved them a lot of time and money, but then it requires a trusted relationship with the vendor. They happen to be a client of ours of many years, and they knew us. So that's one option. A full tender we've seen done, and we've supported clients through full tenders. I think it's important to keep in mind that there are probably around 200 different software vendors out there, and they're not all good. So you could waste a lot of time running through a full tender of all of those guys. I think what we would suggest is somewhere in the middle. Clearly, you could work with somebody like Carbon Clear, who can give you a limited view of the market based on your needs and narrow down that 200 to probably a little over a handful. And doing that, you get into a much more detailed conversation with a smaller number of providers about what you really want, rather than having to trawl through, a big data worth of tenders. But that it's just a view. There are any number of ways to do it, and I'm sure if your procurement team gets involved, they would much prefer to do a full tender and speak to everyone on the planet. Stephen, are there any other questions that are coming through?
There's a couple more, Mark. There's one here. How long should you look to invest in the selection of a suitable reporting system?
I think the answer is you should do it as quickly as possible, because there's no point hanging around. The key thing is, how long is it going to take you to put together your requirements? That shouldn't take long. If you've got a system in place and you follow that system, and then you get into a tender process, and as we said to Toby, this is a question of how you choose to do it. We have seen the software selection processes run as long as 6 months, and that's not in anybody's interest. I think our view would be that you would get it done within the smallest amount of time possible, so 6 to 8 weeks I think should be feasible.
Great, thanks Mark. Another one here is, any tips on what not to do from cases that you've seen?
Oh yeah, okay. Look, the most important one here is, and we said this many times before, and I'm going to say it again because you can't say it enough. You have to work out what you want the system to do before you begin the process of doing the tender. So what we see, and the number one do not do this tip, is don't decide, I want some software, let me start reaching out to software vendors, because what will happen is they'll come and pitch you, and it'll be very difficult for you to clearly discern one versus the other. And you'll probably end up making a selection on either which sales guy you like best or which software system looks the flashiest in the demo. And I know it sounds silly, but we've seen it many times before. And then what you end up having to do is change the way that you run your system to match what the software is capable of, rather than you having a software that matches the system that you're trying to build. So that would be my number one top tip to minimize pain. And I think that's pretty much the key to it. If you can really understand what your requirements are, you'll have a far greater likelihood of selecting a system that's going to work with you for the long term. We have customers and people we now deal with who several years ago made the wrong choice, and they do now spend their lives managed by the system rather than the other way around. And it's fascinating, because in some cases you will talk to them and they'll say, well, we made a bad decision 3 years ago and we bought this software, and we don't want to make the same mistake again, so we're not running a tender. Now, and I find that fascinating, because you're sort of worried about getting burned again, but it seems to me that they're still being burned from the first time. So therefore, they're not. It seems like a strange choice. So I think if you do pick the wrong system, don't necessarily stick with it in the long term. Look to find something that is better and more suitable for you.
Fantastic. Well, thanks for that, Mark and Stuart. That's all we've got time for now, but I'd just like to thank everybody for joining today's webinar, and also to Mark and Stuart again for getting through so many questions. Just to remind you all, a recording of the webinar and the presentation slides will be archived on the 2 Degrees platform, and we'll make this available to you as soon as it's made live. So I hope you found today interesting and useful, and that you'll be able to join us for more webinars in the future. So thank you, everyone.
Thank you.